Investor cautiousness keeps stocks mixed. Oil bounces from local lows. Following two sessions of solid gains, U.S. stocks pulled back on Tuesday as investors looked ahead to the first debate between President Trump and the former Vice President Joe Biden. Equities were also weighed by concerns over coronavirus resurgence in the country. On the positive side, a measure of consumer confidence posted its biggest spike in 17 years in September as Americans grew more upbeat about the economy and employment prospects. The Conference Board Index of Consumer Confidence surged 15.5 points from August to a reading of 101.8. The S&P 500 index and the Dow Jones Industrial Average fell 0.5%, while the technology-heavy Nasdaq Composite lost 0.3%. During the first U.S. presidential debate, Trump repeatedly interrupted and attacked his Democratic rival during clashes over the coronavirus pandemic, race, the economy, and the future of the Supreme Court. Risk sentiment deteriorated following the debate, while the dollar demand picked up amid risk aversion. As a result, Asian stocks finished mostly lower despite upbeat economic data out of China. The official Manufacturing Purchasing Managers Index for September came in at 51.5 as compared to 51.0 in August, while Services PMI arrived at 55.9 as compared to 55.2 previously. Separately, a private manufacturing survey also showed that manufacturing activity expanding in September, with the Caixin Market PMI coming in at 53.0. Still, the Shanghai Composite Index lost 0.20% amid risk-off sentiment after the disappointing debate in the U.S. The Hang Seng Index in Hong Kong jumped 1.3%, Japan's Nikkei 225 Index lost 0.7%, while Australia's S&P ASX 200 skidded 2.3%. Stocks were also pressured by a cautious tone by investors as COVID-19 infections are on the rise again in the U.S. and elsewhere. In Europe, stocks ended slightly lower after Germany warned that delays to the European Union's recovery fund are almost inevitable due to governance disputes. The Stoxx 600 index fell 0.1% at the close, while banks were among the best performers on Wednesday. Concerns of further restrictions to contain the spread of the coronavirus and their impact on businesses on the continent continue to cap bullish attempts in the regional markets amid a second wave of the pandemic. Of note, the UK recorded the largest ever rise in new cases on Tuesday, with a jump in deaths. Germany has imposed new lockdown measures in a bid to contain the virus, while in France, health authorities reported an increase of over 8,000 new infections, up from Monday's 4,070. Concerns about the Brexit deal weighed investor sentiment as well. On the data front, German unemployment declined for a third straight month in September, while retail sales rose much more than expected in August. Germany's retail sales jumped 3.1% month-on-month after a 0.2% fall in July, while the jobless rate in Germany fell to a seasonally adjusted 6.3% in August versus the 6.4% expected. In the UK, the economy contracted at record pace in the second quarter, though the decline was less severe than previously estimated. As for currencies, the dollar rose nearly across the board in initial reaction to the Trump-Biden debate, but finished mixed on Wednesday amid month-end and quarter-end repositioning in the market. As a result, the euro-US dollar briefly challenged the 1.17 handle and closed marginally lower after a modest bounce. The pound sterling US dollar derived support from the 1.28 handle and has settled marginally above 1.29 since then, still struggling to overcome the 20 DMA. The US dollar Japanese yen encountered local resistance around 106.80 and corrected lower on the daily charts, turning the key 20 DMA into resistance again. Meanwhile, oil prices recouped most of Tuesday's losses and climbed back to the $42 area after selling pressure surrounding risky assets has eased. Also, traders checked the weekly EIA report that pointed to a contraction in crude inventories by 2 million barrels last week, defying trade expectations for a build. Furthermore, gasoline inventories shed 700,000 barrels, which came in after a draw of 4 million barrels estimated for the previous week. Despite the bounce, downside risks continue to persist in the oil market as traders remain cautious amid a gloomy outlook for demand recovery, especially as the coronavirus pandemic continues. U.S. stock markets closed higher on trading Wednesday as investors shrugged off the chaotic presidential debate and focused on fairly upbeat economic updates. According to the ADP report, private employers hired more workers in September than they have since June. The private sector added 749,000 jobs, up from the revised gains of 481,000 jobs in August and ahead of a consensus of a gain of 650,000 jobs. Meanwhile, revised second quarter gross domestic product showed a decline of 31.4%, compared with an earlier reading of a decline of 31.7%. As a result, the Dow Jones Industrial Average was up 1.2%, the S&P 500 and the Nasdaq Composite closed up 0.8% and 0.7% respectively. For the month, the Dow was down 2.3%, the S&P was off 3.9%, and the Nasdaq Composite fell 5.2%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.